So today I'm going to be explaining my trading style and how it works. First off, I'll tell you what you're looking at. You're looking at the 1 minute chart on this side here and the 15-minute chart on this side here. You're going to want to use the 15-minute for your higher time frame, understanding where things are at in terms of weeks in the market. Also on the 15-minute chart, this is where I get all my lines here. All these lines show the session high and lows. So if you look at say this Asia session, this high here and this low here, these are based off of times. So Asia session is right about 10 o'clock at night till midnight exactly, and then London session is 2 in the morning to then 5 in the morning, and then the New York AM session starts at 9:30 and goes till noon, and then at noon the lunch session starts and goes until 3:30, and then at that point the PM session starts and goes until 4 o'clock PM. So all these lines show each of those sessions, the highs and lows, and why that's relevant is because most of the time you're going to find that there is going to be some sort of liquidity at these highs and lows. Or when I say liquidity, I'm saying that retail minded traders, the 90% of traders that fail miserably, they're the people who think that at this low right here on the 15-minute chart, right below there is going to be resistance. So price is not going to come down there, and it's going to come down and it's going to bounce and keep going, right? And so they'll get in at this low expecting it'll bounce back and then come back up. And you know what? Maybe once in a while that does work, but more than often than not, that's not the case. What's really happening here is these retail-minded traders are saying, okay, I'm buying now, and they're going to ride it up, and their stop loss is going to be at the bottom of this level right here. They're expecting resistance. It's going to bounce. It's going to go away from here. And so what's happening is what I'm catching the time when they've got buys on, right? And they're round tripping it. So they're holding, and now it's coming back down. And so their stop loss is right here. They don't want to lose any more money. And so this is sitting here, if they're buying on these uptrends, and the opposite of buying is selling. So if they're going to flatten their position, they're going to get out of the market. What do they need to do if they've bought? They need to sell. So those sell stops are right here. And so what happens when they're run and the price comes down into this level? You're going to have a huge influx of people with sell orders that are selling to the market. And so that's going to cause an actual reversal sometimes. And so there's a couple other key things I look for to know when it's a good time to buy and when it's a good time to sell in the market. But that's just kind of the synopsis. And so all of these lines on here that look really crazy and it's hard to keep everything straight. I mean, even if I go farther down, there's just a ton of them. These are the last 25 days worth of price action, the highs and lows of all the sessions. And so you can tell, where price is trended. It's trended mostly lower in the past 25 days, and it's right around this area, the 1820 or 18200 to 18160, somewhere in there. That's really been common. Not that really matters so much. That's generally, though, that's what lines I'm going to be using when I'm looking at this kind of thing. So again, we're going to go back to the 25th right here. This was this Monday as of recording this. And then we're going to talk through how I enter and exit the market and what I look for my trades. It's also important to note that at the time of recording this, I've got about 24 documented trades with a win rate of about 86%. So that means, 8.5 times out of 10 or so, I'm going to be winning the trades that I'm taking. So to give you a reference point right now, you can see my line kind of showing up on the 1 minute chart over here. We're right before open on the 25th for the AM session. I trade the AM session and the PM session. Do not trade the lunch session. It just can get wild and do things that it shouldn't do. If you're holding a trade through the lunch session, if you've entered a trade and you're waiting for it to hit your take profit, that's fine. But don't be entering any new trades on the New York lunch session. So on the 1 minute chart over here, the first thing I do when I'm looking to get in the morning, I'm looking for entries to get into the market, right? So like I said earlier, with these levels of liquidity, all these lines on here, it's really important that we understand how these lines are being used. And when I'm saying that we have sell stops that are being violated, look at what has happened from the London close to the New York open. We've ran through like 15, 20 different lines at till about this point where we're right here. And so all of these lines, the stop's been taken. They're no longer relevant whatsoever. And so what I like to do is in the mornings, right before open, I'll draw a box right here. And what I'm basically saying with this box is I need it to trade outside of this box before I look for an entry. And again, the reason I'm doing that is because these lines are no longer relevant because they've been traded through in the last however long. So as of right now, I pulled back the time, and we're at the 25th at 9:27. So I'm going to skip forward 28, 29, and 30. So there's the New York Open. So right at the bottom of this level right here, now anything below this, I'm looking for entries. So notice how this wick closes, and we've wicked into, and when I say wick, I mean there's the body of the candle right here, and this long tail that it has here is the wick. I'm looking for the wick of a candle to wick into one of these levels on the 15-minute chart. And when it does that, I want it to make a fair value gap after, and it can only wick and touch that level once. And it is also important to note that if there was a level, the bottom of this candle is exactly 415. Oh, shoot, I'm looking on the 15-minute chart, my bad. The bottom of this candle is 42.50. So right here. Now, let's say, for instance, that there is a level of liquidity exactly at 42.50. We want to make sure that the wicks are trading through the line, not to it. So this would be trading exactly to the line. And the problem with that is the stops are sitting under or at. And so if it wicks right there, you're not either, number one, getting all the stops, or number two, it's not perfect. You're not trading into that line, and you're gonna have trades that don't work out well, and you're really gonna regret getting in there. There's some times that it might wick to it and then happen to turn around. That's just life. But I want to kind of show how I go about tick by tick or candle by candle, where I look for trades. So obviously now that this candle right here has wicked into multiple different levels right here and has closed above, just leaving one wick in there, this is where I'm now looking for a fair value gap. I've also got this indicator on my charts where it shows me fair value gaps. And if you don't know what that is, it's 3 candles, and there is no, let's see here. Like there was another one right here, and I will draw that out in a box, just right like that. And so it doesn't show it anymore because price is traded past it. So when a box or a fair value gap is completely traded over, that's when they close. And then it doesn't show up on this indicator anymore. So there's, a one right here, one right here, one right here, one right here, one right here. And the fair value gaps by themselves really don't mean a whole lot of anything. It's the conjunction when they're combined with the levels of liquidity, that's when they really start to mean something, and you can really make some money off of them. So if you can see here, it's basically 3 candles where there's a gap. There's just price has only gone through that area one time, and it's not been traded back to. So three candles, just as you kind of see here. And again, they get covered up once price closes above or below, whether it's a green fair value gap or a red one. So right now, we'll go back to what we're looking at. Price is wicked into these levels on the 15-minute chart right here, down to the bottom one would be this red one right here. So we're looking at this and saying, okay, Now I'm waiting for a fair value gap, and then at that point, I will be looking for an entry. So I'm going to click through this a couple times, and this is a really great day to look at. So right here, when this wicks down like that, there were multiple levels that were broken. And so on the 15-minute chart, you can see right here that there's two specifically that are still valid, but this blue one right here where my cursor is on the 15-minute chart, that one is no longer valid because this second candle's wick has touched it. So in my mind, what that is saying is that that level of liquidity is not important enough to be respected really well, which is how you get your high probability setups. So that blue level is now out of my mind. It's not any good. So theoretically, I could just pull this box down to that blue level and say, okay, now it needs to trade outside of that. I'll pull a little further. So now basically it needs to trade outside of that. And so there's two levels here on the 15-minute chart. You can kind of see my cursor bouncing up and down as well. These two are what I'm talking about. And so now we're waiting for a gap up. So if you're running up into liquidity and coming down, you're waiting for a fair value gap, a red fair value gap. If you're coming down in price, you're wicking into levels, you're looking for gaps up, green gaps, blue gaps. Now, do all three candles need to be blue to make a fair value gap? No. See right here we have black, black, blue, but we're looking for up fair value gaps in this sense. So I'm going to click through it a little bit more, and now you can kind of see that we've got a green gap here, right? So it's wicked into both these levels as we're looking over here on the 15-minute chart, and it's wicked into there, and it's respected both of them. You only need one level, don't need two. This is a one that proves twice, has two levels, and so now it's made a gap. So this candle is closed now on the replay, and so now we're waiting for price to come back down into this fair value gap right here, and so our entry is going to be this white line or so. We're going to go about 2 ticks above the fair value gap, because sometimes they make the gaps and never come back and revisit it. So when the next candle opens, we want it to come down to this white line here, and as soon as it comes down to that white line, we're going to be in. And so when we're in here, we're also going to have our stop loss, or where we say the trade is no longer valid after such point as the bottom of this wick. Whatever wicks into the liquidity, the bottom of that wick is what we're aiming for, right? And so now where that candle's closed, now we need to think about where are we aiming for our levels of liquidity. So there's a couple of different options. So I like to call them hangnails, and the points up here are the highs, these little bumps, right? And so basically when I'm thinking when I'm setting my first take profit, because at my first take profit, I also move this stop loss up to my break even point. So I want to make sure that after I hit that take profit, I leave it enough room to breathe that I can get more of a run and I can make it go higher, because the higher it goes, the more money I get. But also, I don't want to leave my stop too low and it hits a take profit, but then comes down and stops me out and I still make no money on the trade. So I would say, as this wick is right here, we're going to be reaching for probably at least this high, if not this high, before we have before we pull our stop. And it really depends on how price reacts to this level and this fair value gap. If it comes down once and just stabs into it and then takes off, then it's pretty safe to take one off and drag your stop. However, if it comes down and it's churning around in here a whole bunch, and then it finally kind of wicks up one big one right here, then maybe we want to just kind of set our stop like right under here, and that might be a safer bet until we get higher and break new highs. So we'll hit play again here and we'll see. Okay, so right here, that's where our entry would have been. This candle stabbed down into the fair value gap and kept going. Now it's kind of messing around in there, and I'm going to kind of pull this back so we can see. And now it's stabbing around, kind of floating back and forth and back and forth and back and forth, and it's churning, and then, oh shit. Oh no, it stopped us out. Now, that's completely fine. That's price of doing business. You're never going to be a 100% trader where you never lose. That's just the way this life works. Um, you can't expect to win all the time. So this is where it's a good thing to have a stop here. You can't have your stop way the hell down here where you're just losing way too much money. So now scratch all that. And these levels that this was respecting now don't matter. So now let's see here. What did this candle right here wick into? Well, let's see. It wicked into this purple one, and it hasn't wicked into anything. Okay, so we'll keep going. Okay, what did this one wick into? So this one, let's see here. We've got this gray line here on the 15-minute, and that's it. Okay, so now all the time here, it has to wick into level once and then make a fair value gap, and it can't touch it. Another candle can't touch it at all. So let's see what happens. Okay, so now this candle traded back down and it touched this gray line. That is no longer of any concern. That gray line is now toast. So now let's see. Okay, now it wicks down there again, and now we've wicked into this blue level here. So now obviously this 15-minute chart shows you what price did. And so you know that this blue level is the level that it takes at. So let's just see how that plays out on the 1-minute chart. So it wicks down on that black candle as well, and see that the blue line right here is not touched again. If it were to get touched again, that trade is no longer valid. So now it comes back down, shoots way up. All right, so we're in the start to make a fair value gap. All right, we have a gap now. So this candle has closed. This replay shows you the candles as they close. So now what we have is we've got a gap. We're looking for an entry now. So now this gap closes, and what are we doing? We're putting our stop or entry 2 ticks above the fair value gap. Sometimes price will come down and not quite get into the gap and go. Well, we don't want to be stuck down here, whatever. And it's the difference of, like $4 or $5 worth of difference right here on 3 contracts, and even less on 1 contract, which you'll be starting out at. So that's where we have our entry. Let's see what happens. It keeps going, and now it's made a different gap. This candle is just closed, and so now we're looking for our next gap. So we're just going to follow it up 2 ticks above that, and now we're going to wait and see if it comes back into there. And it doesn't, and it doesn't. All right, and now it's made another gap. So again, I know it seems like a lot because our stop loss when we enter this trade is going to be way down here, and that's all right. I understand it's a lot. It's going to seem like, it's a couple $100 if you're on more than 2 or so contracts. And so that can be scary. But again, we're winning 86% of the time. So it's a calculated risk. So now we have our entry right here. So let's see what happens if it finally goes. All right. And it comes back down. It makes another gap. Oh, so right here, and I'll go back one right here. Let's get that back over there. All right, makes another gap right there. All right, and so now we're following up again, and we're going to be 2 ticks above, and that's going to be our entry. So it plunges into there, and we're in. We're in the trade. This is our stop loss, and this is our entry. All right, so now let's zoom out and see where are we aiming for? What is our first take profit? So the really important thing is the fair value gap that we enter in. What is the last of the 3 candles that makes that gap? What is that high, and where does that relate? So I have this handy line here, and I'm going to put that at the top of that, and it looks like it's just about the top of this. So where do we want to aim at to be able to get in the trade, be able to take profit when we should, and be able to move our stop as soon as possible to get all of our risk off of the trade? So it seems to me that when it breaks this level right here, I'm going to drag it up right there. When it breaks that level, I'd say that we can take this super big stop loss and drag it up there. So let's see what happens. Kind of dances around, it just about takes it there, and then it plunges further, and it's thinking about it, and it's thinking about it, and it's thinking about it, and it's churning around right there, going down, and all the while, anything less than this white line, under that white line, you're at a loss. You're in the red, so to speak. Now you can't be upset about that. You can't be emotional about that. You can't be like, oh shit, what if it comes all the way down and stops you out? Because that's what's going to kill you. If you start dragging your stop up and being like, oh, I don't want it to do that and whatever, you're going to stop yourself out more times than not. And in which case, you're going to lose more doing that every time than you are if it does happen to come all the way down here and stop you out. Now, obviously, on the 15-minute chart, you can tell that it's not what that does. And as I click through here, it will come up and go bananas. So here, as soon as that takes that first profit there, boom, this is up here. That's our stop loss, and it's up with our entry. So now if it comes back down here, it spent so much time in this fair value gap and the fair value gap below it that it just is unlikely that it will do that. So now we've hit our first take profit, all right? And I should really label these. Let me just put those on there just so that it makes it easier to look at. So we're just going to name this one TP number 1. And I'll move this one out of the way and kind of move this one over so that we can see. There's our entry. And I'll put this one back down here, and I'm just going to name this one old stop loss. Old stop. And now this entry, because it's hitting our first take profit, is now also known as our new stop. So at this point, we've made $14.25, and that's times 2 because of the contract size. So there's one contract that's equal, and you take one contract off here, that's equal to $28.50. So you made $28.50. Big whoop, so what? And so now we have, the way I trade, I have 3 contracts on right here, and there's 1 off. So I have 2 more riding, and where do I think the next point to go is? So generally speaking, I think it's going to go up. So where? I like to use this tool. It's called the Fibonacci, and really the only thing it's good for is drawing basically lines at different levels. So here's our pre-open run, and this seems to be about the 50% mark. So I think it's pretty safe to say that we should have our next take profit at the bottom here. So we're going to do TP number 2. And that gets most of our position off. And it's a decent number away from the first take profit to where you're actually making some good money. So now, let's see what happens. It's trades, and it blows right up there. You know, this is a little bit uncommon that it just has, 3-4 candles and it's up that high that quickly. It definitely happens, but it's not quite as common. So now we're up another, so that $28.50 that we made before, plus we pulled another contract off, and that one was $35.25, so $70.50. So $70.50 plus $28.50, so now you're up to $90 and some change. So now we're saying, okay, where's our next take profit? We've got one more contract riding right here. And so far it's at this time, it's up, $90. So we've pulled off 90. We have another contract on that's still at 90. So where do we think it's going to go? So what I like to aim for is the tops of sessions, of recent sessions. Now, if I look over here, there's a whole bunch of lines on the 15-minute chart. Which session? So that's why I'm saying recent. Because what's up here? People are putting stops up here. And so that means that there's liquidity, where basically the market plays ping pong with liquidity, and it finds liquidity, and then the market and news and stuff can help drive it in different directions. And that's how you start trending one way or another. But almost every day it'll ping pong over liquidity. So I think that it's pretty safe to say that we can aim for the top of this as our third take profit. So let's do TP number 3. So I'm guessing because this one had so much volatility on the way up that it's probably gonna take a little while for it to get up there. So let's click through and see. So it kind of turns around, makes some more gaps up. All the while your stop is at your entry, so you're not risking anything anymore. And you've already taken profit twice, and so you're up almost $100 for the trade on your one account. And so it's kind of turning and turning and turning, and it's ebbing its way up there. And now we've got the lunch session, and you've been holding this trade for, probably about 2 hours now. And by the time we take profit, who knows? So let's scoot this over a little bit farther so we can see. And we're going to keep going, keep going, keep going, keep going. And obviously, if you're looking on the 15-minute chart on the left side, you can tell that it does get all the way up there. On the New York PM session, it's churning, 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 churning. And then it finally gets there right there. So we have our entry, our last contract went from right here all the way up here, which is 91.50 times 2 is 180. So we had 180 plus about 70 plus about 28. So 90 plus 180, you're looking at about, math is hard, 270 or so that you made on that one trade with minimal effort. You're following the rules. The most time intensive thing to do is finding the stop and getting into the trade. Once the trade's going, you can look at anything else. Just make sure you have alerts on so that you know when it stops you out or if you take profit. And that's really the most important thing. You can just let this thing cook. Now, is it always going to make it to our third take profit? No. This is kind of just this is when we're hitting home runs, right? Our first 2, that's great. We made money. Now our third, that's when that's the big deal. That's the one that we rode all the way up. That makes up for a lot of our P&L. So what else do you guys need to know? All this whole time, basically, I can't look for a reversal until after it breaks this line, this right here, right? So if we're looking, there is an orange line right here that we should be looking for that, maybe it comes up and wicks into this orange line and then turns around. Now, if we look at the 1-minute chart and see if it actually comes to anything, we look and it wicks into it once, and then it just trades right past it and it doesn't do much. So once we've hit our third take profit, we can kind of keep going a little bit to see if there is another level that it goes to. But as you can see on the 15-minute chart, it kind of trades up just below these levels, and then it starts tapering off and falls. So you really wouldn't have made anything else this day. Just the initial loss, as you have right here. Remember we talked about this entry, and that would have been 23, 25, so 26 and $27 times 3 contracts. So you'd be down some from this, but then eventually you'd make it all back with this one. So it's not going to be perfect like that. Like I said, in the last 21 days, I've had 4 losers. 22 days. I've had 4 losers. So not very common do you have this. This is also why I like this example to show you, because it's showing you the reality of trading. And it's also kind of a good thing to talk about as far as composure and your psychology in trading. Because if you take this loss, you're down and all your accounts show red numbers and it's bad and whatever. You have to be able to say, I'm still going to follow my rules. I'm still going to keep my stop loss down here where I could potentially lose even more. And you have to be okay with it. Once you get this drug, then you're basically your conscience is going to be pretty clear, and you're just going to be churning up, and you're being real happy about it. Um, so yeah, this kind of goes for. It doesn't always look like this. You might only get your take profit one, and then it turns around. You only might make $28 or $30 in a trade. So I'm going to show you this here. Let's see if I can get it to come over here. And we're going to kind of look at some of the trade examples that I have here. So obviously it doesn't show you the liquidity level. You'll just have to trust that, these wick down, and this is the first one that makes a gap and then goes. So in this example, here's your most recent swing to the left of your fair value gap. So here's your fair value gap. It came up, this candle closed, made this gap right here. At that point, your next swing to the left is this guy right here. So this is what you're shooting for. This also kind of goes over here, and this kind of level is going to be that's a great indication this should be your first take profit. So once you have your first take profit here, your stop was down here before, you're going to slide that stop up here, which is why it says stop loss after TP number 1, and this one you only made $32. Now this one, same thing as what we just saw on the chart. It came down, wicked into a level, made a gap, and you enter that gap and it just stops you out. Now it does say, and I know, you guys shouldn't worry about this until I've had more time to test this. All of my trades so far, they've stopped me out. The ones that have stopped me out, I could ride down and just reverse the trade to go for a short in the other direction and make all the money back. So that is something that could potentially happen down the road. At that point, I would have basically had no loss ever in the last 21, 22 days, which is pretty crazy. But you also have it could potentially come down or come back up and stop you out for even more, double whatever you just lost. So that's kind of what I'm looking at. But again, here's some great examples. Liquidity right here. And again, trade through it, not to it. This one trades to the liquidity line, and then this one trades through it. That still means that this liquidity line is valid, because there's only one candle wick that has gone through it. Notice it's only the wicks. If there's ever a body in the line, it is no longer valid. So wicks into here, makes fair value gap down, and it comes back up. You get back in, your stop loss is right here, first take profit. This is one that I messed up with, and I've refined my rules since I made this one. My first take profit should have been this level here, because it's the next lowest swing to the left of the swing that makes the fair value gap. So here's the swing that makes the fair value gap. Next lowest is going to be this one, so your take profit one should have been right here. And I'll kind of start flipping through these a little bit faster so you can kind of see this one wicks into 2 levels. So I have that marked out. Here's your fair value gap. This gap, you really should have entered the trade right up here. This one was kind of it did come down here, and I don't know if I was just waiting for it or if I just wrote it out that way. But it should be entry here, take profit 1, 2. This is kind of good. And then 3. And it's also important to note that when it has these hangnails and this isn't really a big one, there'll be bigger ones kind of like these. When they're higher above where you're going to be taking your second take profit, that's the bottom of these hangnails is a really great first or profit point, because it really likes to turn around. This one's a little bit messy. You can kind of pause it if you want and look at where I'm talking about. It wicks way down here, big time into these liquidity levels, gives you an entry and a take profit 1. This one's a little bit weird because it makes its own first take profit point. That's not really something that happens. It just happened to, I've been trading way down, and so there's a whole bunch of nothingness to the left. So I kind of just, chose that as the point. If there's ever any price, within the last couple of hours old, look at that right here for your first take profit. Otherwise, do this. And again, it wicks into this level, it traded to it, not through it. Here's it through, and now it comes back down, makes a gap. First swing below the swing that makes the gap to the left. This one, take profit 1. This, take profit 2. Take profit 3 was going to be down here. But then it takes 2 and comes back and stops you out. And so now I'm kind of just going to slowly flip through these. If you want to pause and look at them, they're all pretty much the same. Just gives you a lot of different examples and how it works. Here's another loss. Here's a take profit. And so there's not much else to note. Besides that, I'm going to post all of these different examples and more as I get them in my Discord that I'm making, that I'll be sharing with you guys, that you'll be seeing. So when I have that, that'll be a good resource to look at. But until then, this video is going to be a great resource. And obviously, I'll talk you guys through these things as they happen. I'd love to sit down and FaceTime or whatever, sit in a Discord chat while we're trading, so I can talk you through as it's happening, as I'm taking the physical trades. That'd be super helpful, I'm sure, to you guys. So at this point, I really don't have anything else to say. You might want to watch this video a couple times through, and I'll have ways to access all of these indicators and the code that I specifically wrote to get this indicator to do this. I'll have that all available for you guys, so you can implement that and start demo trading the strategy until you get really comfortable with it and you can start making some money. The last thing that I want to point out, I know this doesn't seem like a lot. The first take profit on some of those trade examples were $38. Well, that's all fine in games, but as I'm sure you'll have read through the Discord, there are a whole bunch of different accounts that you can have through prop firms. So you could have 10 accounts and you got this first take profit with this $38, but you did that times 10 accounts. So that's $380. And you know what? If it comes back up and it does this, where you got your third take profit hit and it's $270, that's $2,700. And then you can have up to 20 accounts and you can trade more than 3 contracts as you get a bigger buffer. I'll talk to you guys as you get closer to that. At the point of the recording this, I haven't even gotten to that point. So it's just something to think about. I know it might seem like small potatoes, but it can really snowball really fast and make you hundreds of $1,000s a month. So with that being said, when you guys have questions, please reach out to me. I want to help you. I want you to succeed. You guys are really important in my life, and I want to win with you. So with that being said, have a good evening, night, whatever you're doing, and let me know when you have questions.